that yesterday, which makes me really uncomfortable because there's no more alliteration. I know. 8.8 billion dollars. Okay, I'll wait for a few more answers. I know someone. I found someone who's the closest though. Okay, so the closest was Alex Chen. It's actually 12 billion donuts. Yeah, lots of donuts. All right, moving on. So what is cryptocurrency? It is a digital or virtual currency that is based on blockchain technology, which allows users to make these online transactions. So it's an asset, if you remember, that's something that can be converted to cash and that is based on a network across computers. So it's also almost impossible to counterfeit or double spend, which means spend a currency twice. And the they have secure online payments. So the structure and the fact that they're not issued by any central authority allows them to exist outside the control of governments. And these transactions are also secured by public and private keys and different payment systems. So I'm sure most of you have heard of Bitcoin. It is the cryptocurrency that started it all and is the most popular and most valuable. So currently there's over 100 million Bitcoin owners, and it's also high liquidity and high risk. So high liquidity, if you remember, it means it's hard to change back to physical cash, and high risk, it's because the price changes really quickly. So the current price that from I checked 2 days ago, it was one Bitcoin cost $13,093. And I checked like a few minutes ago, and now it's like $13,553. And because of its success, crypto has also branched out to many alternate cryptocurrencies, and these are called altcoins. So some popular ones are Litecoin and Ethereum, but Bitcoin is still represents 68% of the total value of all crypto. So this graph just shows how quickly the Bitcoin price can change. So it's just showing the volatility. So if it has high volatility, that means the price is changing really quickly and erratically, and there's a higher chance of a declining market. But if it's low volatility, the price is relatively stable, and there's a higher probability of a rising market. And Bitcoin price can rise and fall by almost $1,000 in just 24 hours.
Okay, now we're going to get into the details of how to use crypto. And you can actually use crypto with three things. You can either invest in it, mine it, or trade it. So moving on to the next slide, we can see though Bitcoin was like not designed as like a normal security equity investment, because no shares have been issued for Bitcoin. Some speculative investors like the Winklevoss twins, which those people can also be seen in the Facebook lawsuit, were drawn to this digital money of Bitcoin after it appreciated rapidly in May 2011 as well as November 2013. So many people started to purchase Bitcoin for its investment value rather than its intended medium of exchange. Um, but one of the for investing in crypto, there's a lot of high risk and the market value fluctuates widely. For example, the value of Bitcoin is, although it's like dependent on its liquidity and market sentiment, like every other security, it is also heavily dependent on its integration into the market, the public interest in using it, and the performance compared to other cryptocurrencies. Um, you have the threat of unregulated transactions as well as hacks. Bitcoin is entirely virtual, so there is the possibility of a third-party hacker trying to take over your exchanges. And there are a lot of technical and security issues that investors should be aware of before they begin. Popular third parties have collapsed, companies have collapsed or have been hacked in the past. But as of now, you can join a Bitcoin exchange where you can trade Bitcoin for traditional currencies securely. Um, Assets are also stored in a hard drive wallet. Investors who want to trade Bitcoin need a place to store them, and then that is actually done by a digital wallet. So not only that, you also need to buy Bitcoin, which is usually achieved by connecting a wallet to a bank account, credit card, or debit card. So it's the same thing as like buying stocks. Investors can also join an exchange. Yeah, I already said that. But the thing about investing in crypto is that it also generates no cash flow. The only way to make money through Bitcoin or any cryptocurrency is if someone pays more for the currency than you.
Okay, so now let's talk about mining cryptocurrency. So mining cryptocurrency is actually pretty complicated, to be quite honest, but it's best to think of it as miners as auditors. What they're pretty much doing is verifying previous Bitcoin transactions, and this is meant to keep Bitcoin users honest, and was originally conceived by Bitcoin's founder, Satoshi Nakamoto. Um, However, in order to actually earn Bitcoin, because what really happens is that these miners verify Bitcoin transactions and they receive Bitcoins as a reward. It's a some set amount that I actually don't remember off the top of my head, but it's gone down over time as Bitcoin has increased in value. But in order to do so, they have to verify about 1 megabyte worth of transactions. And this requires a lot of computing power because, as we'll see in a later slide, uh, miners have to guess a hash, which is like this really long number that's lower than or equal to the target hash. So in order to make money, you first have to be the first miner to arrive at the right answer or the right hash. And this process is known as the proof of work. And this is pretty much the luck component part of it. So when it comes to cryptocurrency, there are two components. There's first the guessing part, which requires computing power, and the second is luck. You have to be either the first person to get there or have done, I think, more proof of, or like have done more calculations. So it's also important to remember that as cryptocurrencies rise in popularity, like Bitcoin, for instance, so do the number of miners looking to earn that crypto, that currency. So that makes the process even more difficult because you're competing against even more people with more computing power and so on. And obviously, it's only profitable or if you invest in really like high quality mining hardware. So that's why you see a lot of people with like these insane rigs with like 50 GPUs, um, all running at the same time to guess that hash number because it requires loads and loads of computing power and thus electricity, which is one of the main costs when it comes to mining crypto. So this next slide kind of goes over it and how or is another like brief summary. So you have to first verify 1 megabyte of transactions. Now 1 megabyte isn't a lot, to be quite honest, and a lot of miners are asking for more, but for now that's just the way it is. And you also, like I said previously, you have to be the first miner to come up with a hash less than or equal to the target hash. So for a hash is pretty much a 64-digit number that's based in hexadecimal. So the values can range from 0 through 9 and then A through the letters A through F. So as you can imagine, there's a lot of possible combinations for hashes. So that's really the tricky part is, or not the tricky part is guessing that hash or, running a simulation that guesses it a bunch of times. So that obviously, again, requires lots of computing power. So for all the tech people out there, I think that'd be really interesting. It's really interesting.
So with Bitcoin, one of the things that is different from it and regular currency is that you can't keep printing Bitcoins and there's only a limited supply of it. So the creator of Bitcoin, when he started it out, he created a supply of 21 million Bitcoins. And how that would work is every time you mined one block, you would receive a certain amount of Bitcoins. When it started out, you would receive 50 Bitcoins, but with every 210,000 blocks that are mined, the amount of Bitcoins that you would receive would have, and this was just to create just basic supply and demand. Of course, if there's more people that are mining Bitcoin, then your reward that you give for every block that's mined has to have so that you don't run out of your supply. Just because you have such a finite supply of 21 million Bitcoins, it wouldn't make sense to consistently give 50 Bitcoins every time somebody mined one block, just because you would run out too quickly.
Okay, so moving on to advantages and disadvantages of being a miner. First of all, most of these advantages and disadvantages are predicated upon the fact that there's no central authority that issues the Bitcoin. There's no like bank or credit card companies attached to. So because of that, it's easy to transfer funds. There's no transaction fees, and Bitcoin is like relatively safe, and it prevents identity theft and fraud. But the same token, by the same token, there are disadvantages like the fact that it's not accepted everywhere. And a lot of people obviously use it as more of an investing tool rather than an actual medium. So because of that, it's not like extremely popular. And at the same time, there's no reversing payments, and it's also susceptible to illegal activity like money laundering and tax evasion. If you guys are interested in illegal activity, well, so am I, as like, you know, a purely intellectual pursuit. So I'm sure we'll do more presentations on that in the future.
So talking a little bit about how to buy Bitcoin. So first and foremost, you need a wallet, which is an online app that holds all the cryptocurrency that you buy. So you transfer real money to your wallet, and then you can buy cryptocurrency and store it inside the wallet. You can use apps such as Coinbase to facilitate this exchange. The best way to protect yourself is by researching the company, if you'll own a stake in it, how developed the specific cryptocurrency is. Generally, the trend is it's less risky if it's more developed. Recently, PayPal has also put out their own service to buy Bitcoin, but I would strongly recommend against it just because the way in which PayPal sort of doesn't allow you to, first of all, transfer the Bitcoin out of there, and there's a lot of stipulations that go along with it. So just make sure to do your research before you buy any crypto.
Yeah, so today was a very, very, very brief overview of how crypto actually works. And if you're interested in more, I would totally recommend reading Colleen's articles on crypto and the other ones on StreetFins, as well as the ones we sent in the chat, which we will also create a resources page for you guys to check those out. And then we have a couple announcements for the next meeting, because next week it's going to be at the same time, same link, but we will be meeting in breakout rooms. And so what we're going to do at the breakout rooms, instead of making questions like last time, is we're going to start those passion projects we've been talking about. And how those will work, I will talk to the mentors so that it's clear how we'll assign projects. But since the mentor groups are a bit larger than we expected, we might break into 8 groups and have like a mentor lead each group. And then the way we choose the topics of how like the passion projects, like what they'll be about, will be different for every single mentor. It'll be up to them. For some of them, like for example, I know for Matt and me, we've already promised someone that they would choose the topic because they won some game. But it depends for each group. And these passion projects, we'll release more information on it later, but there will be a sort of like a delve into something that interests you about finance and economics, and you'll get to create a presentation and present to the rest of the club on it. And yeah. And then we have a final mentor roster link. This is the same as last time. And if you guys still haven't been placed into a mentor group, please do let us know. We'll send out the link in the email again. And then, yeah, that's it for today. So today ended pretty early, but hope you guys feel like you've gotten something out of crypto. And Colleen, do you have anything left?
For the links in the chat, should I put them on a Google Doc and attach them to the email, since like they're kind of gone once the meeting's over?
Yeah, or you could just make a slideshow. I mean, make a slideshow.
Yeah.
Okay, well, thanks, guys.
Thanks.
Okay, I'll just start. So I was thinking for our mentor groups, we probably want the mentors to meet for like half an hour sometime, maybe this weekend, like Sunday or something. So I know not all the mentors are here, but are you guys all free Sunday, like afternoon?
Yeah.
Yep.
I can't. I have something that I have to do afternoon.
Okay, then I think what I'll do is send out a when to meet for Sunday, and then we'll see. Like, are you free anytime Sunday?
I'm pretty much gonna be busy all day. You guys can just like have the meeting and just like keep me posted.
Okay, that sounds good. Wait, I'm recording this. Oops.